Hello friends, a very warm welcome to my channel. In this video, we are going to talk about Praj Industries, which has a very unique business model. We have made a video on this company in the past, a couple of years before, and this is the second time now we are making it. Before we move forward, if you are new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. Here is a small disclaimer as per SEBI regulations. You can pause the video and read it. This will be the flow of our discussion. We'll discuss the business model of Praj Industries in the beginning. Then we'll look at the stock performance in the last 5 to 10 years. We'll understand the financial performance of the company in the last 5 years. We'll discuss why the stock has given a sharp correction from the top. What is the outlook of the management going forward? How are the valuations of the stock right now? The risks of investing in this business, and then form an overall view. So Praj Industries is a biotechnology engineering company. This may sound too technical, but we'll break down it into simpler forms in the upcoming slides. This company was incorporated in 1983 and it has presence in more than 100 countries. That is, it exports to more than 100 countries. And it's a research driven company and has more than 400 patents to its kitty. They have 5 manufacturing units in India, and they have set up a new R&D center called Praj Matrix, where they work on developing new products and new technologies. This is the broad overview of their business. They have mainly 4 segments. The first one is the bioenergy, wherein they work on technologies and equipments related to ethanol, biogas, sustainable aviation fuel. That is, in the aircrafts also, the company is working on technologies where we can use renewable energy as a fuel. Then the second one is the engineering business segment, where they supply critical process equipment to industries like chemicals, oil and gas, etc. The third one is high purity systems, wherein they supply equipments and technologies to industries like pharma, food industries, etc., where very high quality pure water is required. They are also working on new technologies wherein recyclable material like biobitumen, bioplastics are used for various purposes. One thing which you can see in common in all the businesses this company does is they work on decarbonization theme for a cleaner and a greener environment, and it's a research driven, technology driven company. Now let's talk about the first segment, which is bioenergy, in detail. This segment contributes more than 60% of the revenue of the company. So this is the highest revenue generator for the company. In this, they are working on ethanol plants. So if somebody wants to set up their own ethanol manufacturing unit, Praj can do it for them with the latest technology and infrastructure. They can also set up compressed biogas units for their customers. After setting up these units, they can also take care of the operation and maintenance of those units. They are also working on some technologies like DCO, which is distillers corn oil, rice protein, and DDGS. So all in all, the main revenue generator for the company are their ethanol plants and the compressed biogas units. The second segment, which is the upcoming segment for them, which contributes 28% of revenue, is the engineering segment. Here they have set up a new manufacturing unit called Praj Genex, where they have modular manufacturing of industrial plants. So if somebody wants to set up any critical machinery in their factory, let's say a chemical factory or an oil and gas unit, Praj can do from design, development till setting up for them. They are also working under this segment for industrial wastewater treatment, where they may make zero discharge units. They are also working on technologies related to carbon capture, where whenever there is a waste material emitted out of any industry, they capture that carbon material and convert it into useful value added products. So another thing which you notice in their business is all these themes are the themes which the government also stresses upon and wants to encourage. The last one, which is the high purity systems, is a third segment contributing 12% revenue to the company. So this high purity water can be a useful product for new emerging themes like EV batteries and semiconductor industries as well. So this becomes like a proxy play to this theme. As it is a research driven company, let us talk more about their R&D and innovation. They have set up a new R&D center called Praj Matrix at Pune, where they focus on areas like biopolymers, biobitumen, sustainable aviation fuel, and next generation ethanol. They have certain partnerships with some foreign companies and work with their collaboration as well. So their first integrated ethanol to jet SAF, which is sustainable aviation fuel, facility is expected to go live by September 2025. So in Q1 FY26, nearly 40% of the company's revenue came from exports. When we talk about exports, their key business markets are US, Latin America, Southeast Asia, and Africa. Certain policies in US like US 45Z policy benefits this company. So this is a broad outlook of their business. Now let's look at the price performance. Post-COVID, the stock came into the limelight. The government focused on all these themes that Praj was mainly in, especially the ethanol theme, and the stock gave a massive rally. It hit a all-time high of around 875 rupees, and from there we saw a very sharp correction, and the stock became less than half, and it trades now at around 400. Now if you see this range of 350 400 on the charts, you'll find that the stock had consolidated in this range for a very long time earlier. So this forms a very strong base, and unless something really bad happens, it is highly unlikely that even now the stock will not break this range. So in terms of technical analysis, the stock has reached a range wherein it will find massive support. Now look at the fundamentals. In terms of revenue in the last 5 years, we see a good jump in the revenue, but we also see that there is lumpiness in the performance of the company. In FY21, the company did a revenue of around 1300 crores, which rose to almost 3500 crores in FY23. But in the last 2 years, we saw a decline in revenue. From 3500 crores, it came down to 3400 crores in FY24, down to 3200 crores in FY25. So this was the main reason for the fall in the stock price. EBITDA continued to rise up till FY24, although revenue fell in FY24 because we saw some margin expansion in FY24. But in FY25, we saw the EBITDA fell down to 315 crores. Margin wise, we see that the margin is more or less range bound. It is ranging between 9 to 11%. And going forward also, the management says that the margin may be in high single digits. The ROE is around 14% because the company has done good amount of capex in the last couple of years. You can find this figure in the cash flow from investing activities very clearly, or in CWIP section on the balance sheet. The promoter holding has always been less in the company. It's around 32%. In terms of cash flow, the company is pretty strong. They have 62% EBITDA to operating cash flow conversion rate, have taken an average of the last 5 years. So they take advances from customers to set up their projects. So they have 866 crores of advances on the balance sheet, which shows the strength of their business. They have investments worth more than 400 crores on the balance sheet. A lot of them are into mutual funds and bonds. So this shows that it's a cash rich company. Working capital is quite effectively managed as the net working capital days are just 1 month. So in terms of balance sheet, it's a very strong company. Now what led to the sharp fall in the stock price from 875 to 400 range? The results deteriorated. The lumpiness was visible in the revenue that led to the fall in the stock price. There were execution delays, partly from the customer side and partly due to the uncertainty in the government policies, where customers take a back seat in their decisions and postpone their execution of these projects. And overall, the market sentiment also in the last 1.5 years has been weak, which added fuel to this fire. Before we move forward, if you have not joined our Telegram channel yet, do join today by clicking the link in the description so that you join the correct Telegram channel. We post our market analysis every day before the market opens and also share portfolio allocation strategies. More than 8,000 people are daily in touch with us on our Telegram channel as well. Now let's talk about the most interesting part, which is the growth outlook of the company. The company wants to increase their export share from 20% to almost 50% by FY30. They want to work on their newly decided platforms like BioMobility, BioPrism, and ETCA. Their newly set up manufacturing unit called GenX Modular Engineering can generate close to 2,000 crore revenue at its peak. And this will gradually ramp up in FY26 and FY27 is what the management says. They want to increase the service-based revenue from 4% to 10%. So in service-based revenue, generally it includes the O&M part. They want to focus on the compressed biogas segment also going forward. When we talk about the specific guidance, the management is not giving any specific guidance for FY26. Looking at the weak results in Q1 FY26 and anticipated weakness in Q2 FY26 as well, looks like having some growth in FY26, the year as a whole, looks difficult for the company. And the management is not giving any specific guidance too. They are just hinting about the margins and say that the EBITDA margins can be in high single digits going forward. So we cannot expect margin expansion as well. But the order book is strong. They have 4,500 crores of order book. It is just that the customers are not going ahead with their capex plan so soon and there is uncertainty in the market. Now let's talk about the most critical part, that is valuations. The stock trades at a price to earning ratio about 53x, price to book ratio of 5.4x, EV EBITDA of 24 times, and market cap to sales of 2.3 times. So price to earnings at 53x looks visually very expensive. This is appearing high because of the high depreciation which is seen in the P&L account due to the recent capex done by the company. So a more suitable metric to value this company would be EV EBITDA. In terms of EV EBITDA also, if you see, it trades around 24x, which is slightly expensive from an investor's perspective. But if you see the last 10 years median EV EBITDA, the stock has always been expensive. It usually trades at a median EV EBITDA of around 20 to 25 times. So although the valuation is slightly expensive on the EV EBITDA front, because of the niche areas in which the company is working, because of the high entry barriers in this business, and because of the new themes or the emerging themes in which the government or this company is working. They deserve certain premium over the normal companies which we study. So the valuations, I would say, are slightly expensive, but now post this correction, the stock is not highly overvalued. Now, what are the risks of investing in this business? A lot of the business of the company depends on the policy changes and regulatory reforms by the government. One decision by the government can drastically impact the business of this company. Just to give you an example, let's say the government decides not to go ahead with the ethanol blending program. The business of this company can be drastically impacted. Working capital management is critical for this company, and the company should try to reduce the lumpiness in their business. So there should be execution which is smoothly done in the years coming by. In terms of exports, since the company wants to go ahead and expand their export revenue from 20% to 50%, the geopolitical risks will create more uncertainty in their business. Margins have not been very impressive. In Q1 FY26, in fact, the margin fell to 4 to 5% in EBITDA. So the company should focus on maintaining their EBITDA margins in the range which they have done historically. And it's a tech-related or R&D driven company, so they always have to be on their toes, innovating, developing new technologies. Else, customers will switch to other tech-led companies. So this was an overall discussion about the business model, the growth prospects, the valuations, the financial performance, the risks involved in this business. Now, what is our overall view on the stock? If you're holding this stock for a very long time and you have not sold it at the top, ideally in such lumpy businesses, profit booking also becomes very important. But if you have still held on to it and not sold it, as technically it has reached a strong base and the valuations have become reasonable, you should continue to hold. The company has its FY30 growth target intact, wherein they are targeting to nearly triple their revenue from the current levels. So if not triple, even if they double in the next 5 years, it is a good stock to hold. And if you are somebody who's looking for a fresh entry in this stock, you should decide what kind of an investor you are. If you are a very patient investor who can invest in lumpy businesses, wait for 2-3 years for the results to improve, only then this kind of a stock suits you. But if you want a constant quarter on quarter growth which you like to monitor, then this stock may disappoint you. So if you have such patience and if you want to invest from a 3 to 5 years perspective, then the current valuations are likely to be suitable for your entry. So that's about Praj Industries. I hope you like the crisp analysis. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names in the comment section. Do join our Telegram channel. Thank you for watching and have a wonderful day.